Welcome to Energy Quick Chat, where we rub minds with stakeholders in the energy markets. I am Justina Okechukwu. OPEC, in its monthly oil market report for June, kept its oil demand growth forecast for 2023 mostly steady, but warns of increased economic uncertainties ahead due to high inflation, higher interest rates, and high debt levels in many regions. Earlier in the month, OPEC and its allies announced that they would deepen production cuts for 2024 by slashing another 1.393 million barrels of crude oil production each day, but this has not helped oil prices in any way. To unpack this for me is Amena Bakr. She's the Deputy Bureau Chief and Chief OPEC Correspondent at Energy Intelligence. Amena, it's great to have you here. So what were the key factors behind OPEC's latest position, and what does this mean for the global oil markets?
Thank you so much, Justina, for this. Basically, you kind of summarized what OPEC did in terms of the extension of the cuts into 2024. And this is the voluntary cuts, and they amount to around 1.66 million barrels per day. They also adjusted the baselines from some of the countries, especially the African countries that were unable to meet their production. So these adjustments will be made in 2024. In addition to that, Justina, Saudi Arabia added the cherry on the cake, so to speak. So in July, they will be making an extra 1 million barrel per day cut. Why this policy? They're trying to address three things all at once. And I really appreciate that the market didn't fully understand the magnitude, or what we're calling this mega deal. First, they want to address the short-term volatility, medium-term volatility, and long-term volatility. And by that, Justina, is not addressing immediate oil prices. As you rightfully said, we didn't see an immediate impact into the oil price. Perhaps that's going to have a delayed effect. The July cuts from Saudi Arabia didn't take place yet. We're expecting to see a tighter market by the end of this year. So perhaps that would translate into higher prices. But just one important thing I want to clarify is that there's this huge disconnect between fundamentals and sentiment in the market. And that's what's causing this lack of response due to OPEC policy.
So having said that, what do you make of OPEC's assessment of the global economic uncertainty, in particular on the demand side?
Yeah, they haven't really changed their outlook. They're still expecting growth from China. There's a lot of hope riding on that. And based on the OPEC policy that they took, they're still expecting demand to rise. And it's kind of backloaded into the second half of this year. Demand is coming back. I mean, according to our estimates too, we are seeing some of this demand. It's slower than usual, which is making now some of the analysts out in the market and observers question, what if the demand is really weaker than what we saw? Are we going to perhaps see more OPEC action? And OPEC, of course, has that flexibility. They can always call a meeting and reassess their policy. Their next meeting, formal meeting, as we know it for now, is going to happen in November.
I know you spoke about a reassessment. Do you think OPEC will revise its oil production quota again and anytime soon?
Yes, that's correct. There could be a reassessment at any point in time. They're just a phone call away. I mean, we've seen in previous meetings, they don't have to physically meet. Justina, these days, I mean, like we're having this interview today, everything happens online. So they have a lot of flexibility when it comes to that.
The IEA's 2023 oil demand growth figure was slightly above OPEC's. Any idea why?
I think it's a little bit, the IEA always kind of differ from OPEC, and we've seen a lot of differences happening between the two, and perhaps even a little bit of tension between consumer and producer states. I think they are, I don't know what methodology they're using, but their targets or numbers seem a little bit too ambitious to what we're seeing now, especially because the recovery of the growth and out of COVID has really has been slow. It's not what anyone expected. So I would be more on the conservative side, and at Energy Intelligence, we even have a little bit more even conservative numbers than the ones that OPEC has.
So what's your outlook for the oil markets for the rest of the current year?
Well, the outlook is still, we're expecting demand from China to pick up. We're expecting a lot more tightness in the market due to the cuts that we're seeing, perhaps even a deficit in supply that will, all depending on, again, the sentiment and fundamental finding alignment once more, that would translate into a higher oil price, perhaps $80 by the end of the year.
Now, Amena, before I let you go, OPEC is celebrating 60 years of delivering value. Briefly tell me what this means for the group.
Yeah, that's right. I mean, all the group members are in Iraq today celebrating the 60th anniversary for OPEC. OPEC is a group that has really stuck together through thick and thin, and they don't let political differences get in the middle, Justina. I mean, there's always questions around the OPEC Plus group now, the participation of Russia in the group, how that might not be the political, send off a kind of negative political vibe, etc. But this is a group that has stuck together despite members of the group being at odds with each other. We had the Kuwait invasion by Iraq. We had the Iran-Iraq war. These are members that within OPEC that were fighting and at war with each other, but that didn't break up the group because this group values market management, and they have something in common, which is, just restoring or making sure that there is balance between supply and demand, and that's to the advantage of both producers and consumers. I see them, as the late Mr. Muhammad Barkindo used to say, this is a Catholic marriage that will not break up.
Thank you so much, Amena, for joining us on Energy Frontiers. Those were great insights. Amena Bakr, Deputy Bureau Chief and Chief OPEC Correspondent at Energy Intelligence. Thank you, everyone. I'll see you next time.